Hello everyone, welcome back to a new video. Today we're going to be looking at Tesla. Now before we get into this, please understand this is strictly for educational purposes only. If you guys want financial advice, go seek financial advice. This is strictly just me giving you guys my opinion. Everything is completely subjective. Take what you want from it and let's get started. So looking at Tesla, let's just backtrack for a bit. We are going to assume that Tesla is bullish just because we've had this huge history of growth from 2010. We're not going to change our bias until structure slowly starts to break, as sometimes chart patterns only break support to capture liquidity and then continue bullish. So if that is the case, I'll show you guys the scenario for it. I'm only going to cover bullish scenarios as I don't think we'll trade bearishly. So let's break this down. We're going to start at these 2020 lows. I believe that's what it is. And we see this big old head and shoulders pattern here, right? I'm going to stop there. This line right here that I have is the neckline of this head and shoulders pattern. So this equates to liquidity, at least in my eyes. Now what happened? We captured that liquidity and ultimately traded into that right shoulder level. So what could be happening right now is we're just trading sideways and sideways and sideways, building up enough people within this new accumulative pattern right here to ultimately trade bullish and squeeze the, I'll show you what I'm talking about in a second. And we're going to squeeze this pattern out. So we could just play off of that 230 range if price does want to continue bullish, break through our moving averages and play off of trend. I would assume that would be cool, but I don't think that's the case either. I think what happens is earnings are coming up, if I'm not mistaken, in a couple weeks. I think Tesla's going to have really good earnings. I'm not really one to track fundamental analysis, but the technicals, man, oh man, this looks extremely bullish. And if it's not, we're just going to tank out of nowhere. So, oh, not what I meant to do. We're just going to tank out of nowhere. Now, Tesla captured this liquidity, check. Also captured that liquidity, check. Let's actually draw this out. So you can do it both ways. Liquidity capture, and we could possibly see price trade higher only due to this pattern right here. I'm going to break it down on a smaller time frame. This is one gigantic accumulative pattern. You see your head. All of this can be considered a left shoulder. All of this can be considered a right shoulder. And now we're just breaking through that neckline. So if this is extremely bullish and earnings are coming up, you're going to see Tesla really, really pop off. Now, this gap, just because this is a head and shoulders pattern, in theory, should not fill. And if it does, we might be looking at a whole separate pattern and I might be changing my analysis. But until then, we have yet to even show signs of us wanting to come and trade back into this area. So just assume that it is bullish based on this pattern right here. Now, since liquidity was not just captured there, liquidity was also captured here. And what do we see? It's the head of this head and shoulders pattern. Oh, Siri, I'm not talking to you. But you guys get the point. Tesla, we tend to capture liquidity, and liquidity in my eyes is just trend that's broken until we reverse in the opposite direction. So in this case, we've done that multiple times. Here, 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 and we could be seeing very, very, very good returns on Tesla. So even from here to all-time highs, it should be like what, 200, 150% maybe, more, maybe less. 113%. Wow, a measly 113%. But if we're looking at it in the extremely bullish case, I'm going to draw out our Fibonacci tool from lows to highs. This is in logarithmic, isn't it? Yes, it is. Let's change that. At the very, very, very least, to a 618 level, you're seeing 370%. This should be like 500%. From there, that makes a lot more sense. And this should be 900 from there. Close enough. So this is accurate in my eyes. I've seen these numbers multiple times. And Fibonacci levels, they tend to line up with these percentages. Why? I'm not smart enough to tell you. I literally have no clue. One of you guys can tell me in the comments. But yeah, this looks really, really, really good. When all of this stuff lines up too perfectly, I sort of question it a little bit. Are we seeing divergence on the OBV and RSI? No, not yet. I thought I saw some divergence right there. Anyway, I'm going to make this a quick video. I'm not going to really go too deep into detail. But overall, when I look at stuff in the markets, I'm looking at liquidity captured, some sort of accumulative pattern forming, check, liquidity captured, check, check here as well. And do we have upside targets is my question. So this gap was filled, but it's not totally filled. I guarantee you if we come and trade into this area, we're completely blasting through it. There's a gap right up here. So even if you guys are trading this as options, that's still fine. Do we have any more gaps? Nope, that was filled. So at the very least, if you guys want to take this as a trade, mind you, it's still not financial advice. We're looking at a 47% increase. So you guys can take this, you guys can look at this, analyze it yourselves, see if it's something that is suitable for your trading styles, and ultimately play it if it's within the cards. It is a $195 stock. I know some people like to trade stocks at a little bit less in price, but for Tesla, we are extremely liquid, and we do seem like we are giving signs of bullishness. So if you guys are also bullish, this is something that I would not really hesitate and wait much longer on, just because it is a head and shoulders pattern. There's not many times where we come and retest the neckline of this head and shoulders pattern, and we're still trading within it, technically. This right here is the peak of that neckline. So another like what, 1% maybe until we're trading out of it, past the white line of my moving average, 1.85%. So keep that in mind. Once we break through this white line, we could be absolutely taking off. For number one target would be this gap. Anyway, you guys have my analysis here. You guys have my price target. Let's call this a 3-year price target of 916. I don't think that happens anywhere close to now. So let's say 3 to 5 year price target. As this, in theory, let's break this down, could be, no, let's not open my notes. I'm trying to pull out my Elliott wave. 1, 2, 3, 4, and 5. And this could be your ABC correction. A, B, C. So in theory, if this is done, we're starting our new impulsive wave upwards. Let's call that 1, 2, and this would be, in theory, wave 3. Wherever wave 3 wants to go to. 3, 4, what do we say, 916? 5. So if I had to guess, we're part of the strongest wave right now. If this is accurate. My Elliott wave traders, you guys can let me know. But this, in theory, should bring us to another recession, though, right after. Because if this happens, you're probably going to see some shit like this. Which might even come fill that gap. Ooh. But that's a long time from now. Let's just focus on this. Let's really just focus on that. And then this would turn into, I'm going to show you the logic behind this. If this happens, you see that trend right there? That's also liquidity, just waiting to be fucking eaten up. Now, as soon as we break through that trend, which would be in our wave 5, this would be our final liquidity sweep before we become bearish again. Everybody's waiting for a huge parabolic movement, and what happens is price just swiftly breaks through it, and we tend to reverse right after that. The true liquidity where it's being formed is on this neckline, and although it's not really big of a push, it's enough where the people who are buying down here are really getting out of their positions. So if you're looking at it from that perspective and you see the value in a 300% move to, let's say, a 500% move, this is something that I personally would be trading. What is it in risk to reward ratio, out of curiosity? Our stop loss would be right below those lows. We're looking at a 1 to 8.5. And if we're just taking it to the target that we looked at earlier, this is about a 1 to 1.5. Personally, not enough for me, so I will be taking this into new highs. So at the bare minimum, a 1 to 1.5. At the best you can get, in my opinion, would be close to a 1 to 15 risk to reward ratio. So keep this in mind. This Elliott wave impulse is what I will be looking at. And if this does materialize, we have my wave 5 final target. Wave 3, in theory, which we should be in now, is going to be the one that pushes up and takes out all of that trend. And if that does happen, you guys know why. It's the wave 3. Wave 3 is always the strongest wave. This is not an Elliott wave video. I'm just here to give you guys regular technical analysis. Anyway, take care, guys. I've rambled for too long. You guys have my price targets. Hopefully you guys are able to utilize this and actually find some value within it. And peace. Till next video.